Oversold AI stocks often represent some of the best opportunities in the market because they combine strong long-term potential with temporarily depressed valuations, giving investors a chance to buy into future growth at a discount. So today we are diving into 3 of the most oversold AI stocks to buy now that have the potential to make you rich if you're patient enough to ride the coming wave of AI adoption and expansion. These are not random picks. They're stocks backed with solid fundamentals, clear growth opportunities, and significant interest from Wall Street. So if you're serious about making money in the stock market, make sure you watch till the very end, and don't forget to subscribe and turn on notifications so you never miss an update on the hottest stocks with huge potential. First on our list is Xerox Holdings Corporation, trading on the NASDAQ under the ticker XRX. For many investors, Xerox is a name synonymous with office and print solutions. But what many don't realize is that this company has been aggressively transforming its business model to adapt to the modern era. Xerox remains a known leader in office and production technology, but it is increasingly shifting toward IT services, digital transformation, and artificial intelligence integration across its offerings. Looking at its most recent financial performance, Xerox reported revenue of $1.58 billion, which represented a slight decline of 0.1% year-over-year and a 1.1% decline in constant currency. While the revenue contraction was not massive, the real concern for investors came in profitability. The company posted a GAAP net loss of $106 million, or 87 cents per share, which was a steep decline compared to the previous year. On an adjusted basis, Xerox recorded a net loss of $77 million, or 64 cents per share, down $118 million year-over-year. The adjusted operating margin slipped by 170 basis points to 3.7%, reflecting higher restructuring costs and weaker core business trends. Cash flow was also under pressure, with operating cash flow coming in at negative $11 million, which is down $134 million compared to the previous year. Free cash flow was negative $30 million, also down significantly by $145 million year-over-year. These numbers make it clear why the market has punished Xerox stock, pushing it down to a current price of around $3.80. Despite these challenges, Wall Street still sees some upside potential for Xerox, given its deep restructuring efforts and potential for cost efficiencies to improve results over time. Based on the latest 12-month price targets from 3 Wall Street analysts, the average forecast for Xerox is $4.50, with a high estimate of $5 and a low estimate of $4. That represents an upside potential of over 13% from current levels. While this may not look as explosive as some high-flying AI names, Xerox is categorized as oversold and could rebound if management could stabilize operations, integrate its acquisitions more effectively, and prove to the market that it can generate sustainable cash flow once again. Next on our list is Salesforce Incorporated, trading under the ticker CRM on the New York Stock Exchange. Salesforce is one of the most recognized cloud-based software companies in the world and a dominant force in customer relationship management platforms. Over the years, Salesforce has evolved far beyond CRM alone, offering a wide ecosystem of enterprise software solutions integrated with artificial intelligence. The company is pushing forward aggressively in the AI revolution with its Agentforce platform and is continuously expanding through acquisitions to stay ahead of competition. Financially, Salesforce has remained a strong performer even as its stock has faced pressure amid broader AI and technology market volatility. In its most recent quarterly report for the period ended July 2025, Salesforce posted revenue of $10.24 billion, representing a 9.8% year-over-year increase. This result was a clear beat against analyst expectations, coming in 1.02% higher than the Zacks consensus estimate of $10.13 billion. On the bottom line, the company delivered earnings per share of $2.91, which was also well ahead of expectations and marked a 5.05% positive surprise over the consensus EPS estimate of $2.77. Compared to the same quarter a year ago, when Salesforce posted EPS of $2.56, the company is showing steady margin improvements and operating discipline. At its current stock price of around $256.45, Salesforce is considered oversold given the disconnect between its strong financial performance and the recent declines in its valuation. Analysts on Wall Street remain bullish, with 24 analysts offering 12-month price targets. The average target price is $333.68, with the highest forecast at $440 and the lowest at $225. This average price target suggests an upside potential of over 30% from current levels, making Salesforce one of the strongest oversold AI plays for investors looking for growth combined with profitability. Last on our list is HubSpot Incorporated, which trades under the ticker HUBS on the New York Stock Exchange. HubSpot is a fast-growing software company that has carved out a powerful niche in marketing, sales, and customer service platforms. Its AI-powered customer platform integrates multiple functions, marketing automation, sales pipeline management, and customer service solutions into a single easy-to-use system, making it an essential tool for businesses looking to streamline operations and boost efficiency. In Q2, HubSpot recorded revenue of $761 million, representing an 18% year-over-year increase in constant currency. This result exceeded analyst expectations by $22 million, demonstrating the company's continued ability to drive growth even in a challenging macro backdrop. Notably, HubSpot reported 20% billings growth, improved its net revenue retention to 103%, maintained steady gross margins at 84.55%, and achieved a 17% operating margin on a non-GAAP basis. These metrics reflect a highly efficient business that is scaling well. Breaking down the numbers further, HubSpot delivered subscription revenue of $744.5 million, up 19% compared to the prior year, while professional services and other revenue came in at $16.3 million, up 21%. On the profitability front, the company reported a non-GAAP net income of $117.3 million, or $2.23 per basic share, compared to $103.5 million in the year-ago period. Cash flow generation also remained strong, with $164.4 million in operating cash flow compared to $117.8 million in Q2 of 2024. Non-GAAP free cash flow came in at $116.2 million, a significant increase from $92.1 million in the prior year. As of June 30th, 2025, HubSpot had $1.9 billion in cash, cash equivalents, and investments, providing it with significant financial flexibility. The company also repurchased $125 million of its common stock during the quarter, showing management's confidence in the long-term outlook. Despite these strong results, HubSpot stock trades at around $472.71, creating an attractive entry point for long-term investors. Wall Street remains highly bullish on HubSpot, with 29 analysts issuing 12-month price targets. The average target price stands at $691.11, with the highest forecast reaching $900 and the lowest at $600. This average target implies a potential upside of over 43% from current levels. Well, that concludes our list of the 3 most oversold AI stocks to buy now. Each of these companies, Xerox, Salesforce, and HubSpot, represents a different angle on artificial intelligence adoption, from turnaround stories in IT services to established enterprise software giants and fast-growing marketing automation leaders. While they each face their own challenges, their current valuations reflect excessive pessimism rather than their long-term potential. For investors willing to be patient and look past short-term market volatility, these stocks could deliver substantial returns as AI continues to transform the global economy. If you found this analysis helpful, make sure to subscribe, hit the like button, and turn on notifications so you never miss our updates on the hottest stocks with the potential to make you a fortune in the years ahead.